Yeah, and this is exactly what it is, right? Like you've got this move, which is continuing to hold this. You have, I don't even know if you have any hard closes underneath it. Doesn't look like you do. You have no hard closes under it. So really that's the key to this piece of the move. Like here's the hold. There's no hard closes under it, right? There's no hard closes on this move. And you could even move that to here right now. So where you could stop actually, oops, let's do this. You could stop underneath that level. But again, I wouldn't be getting out of this particular trade when I'm looking at this range unless we hard close this level, because this is what's holding the entirety of the move up, right? So you don't have that. Now let's make it solid, and yeah, let's go pink. Yeah, okay, that's good. Like you don't have any hard closes under this. So really, if you're going to lock up profits, it should be when you hard close this, because that's right when it's going to dump. It's going to bounce off this, etc. But this is how you're dissecting a move, right? Like this is the exact thing that you need to do to dissect a move. When you have this kind of scaling up and no pieces of that move left, you don't have any trends to create. So it's just a matter of continuing holding sideways while these local trends get made, right? Even here, you don't have any hard closes of this trend. You don't have any hard closes of your first hold level there. Like this is the base of the move. This is what it needs to hold, right? It's, you've got all these interior trends that you can make and find. You can array it out to here from, distribution to distribution. But really the key is like, where's the polarity in the move? And if we actually take the replayer tool, you don't even have polarity until this moment. And then I would even go in here and say, what's the final hold level? Like, is this tested? Yeah. Is this? No, I guess that's not really tested. So like you hard close over this and the move has gone up. You hard close over this and the move has gone down. So that's kind of where you've defined your move down to. Like, yeah, okay, you have trends here, they're going to break, but really, again, the key is the hard close, right? So if you hard close under this, you're going down. If you hard close above that, you're going up, because you have to find those moments of polarity, right? Yeah, no hard closes. Not on either side yet. So there's really nothing to do. Just stay in this trade. It's just continuing to hold its range. It's Pandora's boxing, right? Like it's doing the same thing, and it'll eventually break through one of its trends, and that trend will fuel it, right? So there's that trend break, and that's nice. The trend is starting to break, starting to develop over. No hard close on either side. I would get out of this trade if we hard close this level here. There's no hard close yet. And that's fine. And does it hit our target up top? Let's just take a look. Yeah, you get out right there. I wonder if there's any targets that we missed. That's the next thing I would say. Yeah, there is actually one right here. Actually, that would have been our next target. So you would have been in the same scenario. So let's actually go back to this. Let's go to the higher time frame. Yeah, that is its own range there. You can see that's its own range. So we just simply we marked the top of the move. We forgot one of the ranges. Let's make sure we have the right target here. That's kind of not really liking that range. Let's see. Let's go do this again. 30-minute, that's tested. 15 is not. I don't love it. I actually like this a little better. Let's see if there's anything else here. I don't love it. 3-minute, let's check the 1-minute. Tested. That's pretty close. I'd almost rather see something like this as a target. Which gives you this right here, right? Where was the level started? Right there. And there's a deeper piece of that. So right there, like that's your next target. Actually, you have this right here on the 15. Yeah, this is the target. This is right here. Yep, right there. Okay, so that's fine. Stop. Trading view. Hello. Oh, I didn't hit pause. Haha. So let's go dissect this piece of the move now and see the key difference here, right? Like, notice how immediately inside of this move, you're already pushing the range up. Like there's, okay, so these two moves, this right here, this first set of candles right here, compared to this first set of candles right here, they both reach up to one target and they both create a trend, right? So this, like this, creates a trend here, and that breaks this to this right here, creates this trend. Let's go, we're on the 1 minute, perfect. Let's go one candle at a time. And that breaks up, but that's good. So it has a new trend it makes, right? So it's almost the same move right now. It's looking like it's going to be the same thing. It's going to push the range up, and it's going to actually unbind this to not have any hold levels, because right now, this is the level right here, right? Right now, that's the level. Okay, so we have a trend. Okay, so here's your first key difference. Your trend actually wasn't even developed here, because your trend would be like this, which isn't a trend. The best thing you can do is mark an interior trend like this, which you would also have reset the process like this. So this hasn't found the top of its range. This has a trend it needs to break, right? And it now has a hold level that it has to unpolarize off of, right? Hits that hold level, hits its trend, needs to hard close this level, right? So this is the hold on the other side. So this is your kind of your big difference in this move is one move unbreaches its range. So it has to create its hold level, which would be like this. Okay, we have a hold level here. So you hard close over that, so we can take this out. So you hard close over this, just like you hard close over this one here, and we can take this out too. We're trying to make these moves as similar as possible. This here has a move it needs to hard close without a range without a trend created yet. Okay. This then also has this base of the move right here. Okay. And this has the base of its move right here, because there's nothing left underneath this. So if you hard close, let's take those two away. And if you hard close this guy, like your move is going to be done, right? And so there it is. There's the hard close against the trend. You haven't made any trend breaks. You haven't kind of recaptured the range, and you're failing the base of your range. So this thing should just pull back now, right? Because it is hard closing exactly where it's supposed to, right? So this would be like a trigger point for a short. If you got in a short here, this is where you would trigger out of the short. Like there's your target. There's where you trigger out. Oppositely, this side, you don't have that hard close on this trend. But the second you have the hard close here, like the move is done, right? And then you can, so you can see the difference here, because in this, you actually don't hard close. Well, first off, you don't recreate the top of your range. Secondly, you don't create a new trend. So the first step is always, okay, let's create that first trend. That trend breaks. Let's see if it hits a hold level, or let's see if it captures a new top, right? So same thing here. Like, let's see if it creates a trend. And if that breaks, let's see if it goes above and creates a new trend, which will break up and create a new trend, which will break up and eventually unpolarize itself against whatever little stupid hold level is here, just like it did against this level here, right? It just keeps creating these higher and higher trends until it unpolarizes itself and then just takes a straight move up. So that's the first thing, right? Like that's your first kind of giveaway on this move. It doesn't actually create a new trend. Like it does, like this is its trend. I guess that's the right way to say it. This wasn't the trend. This wasn't the trend. It keeps unpolarizing its move. This was the trend, right? Like that was, but you can see where that's shown to you by the hold level. So the first thing is this does create its trend. So that's your first giveaway. Your dead giveaway is that it hard closes the base of the move, as to where this is the base of the move and it tried to hard close it. It couldn't. But the second this one hard closes, that like the move is gone. And then, you know, wherever you end up is fine. You're always going to have this set of targets, right? You're always going to have this. And then, you know, even here, just before we say the next thing, you don't even have a trend yet. So really what you want to do is, you know, mark, oops. Yeah, what you do have, which is this, right? And, you know, so you break this, it's your trigger point up, right? Back to the other side is your trigger point up to move up in the move and start moving up against trend, and, you know, higher time frame and higher and so forth, right? Like that's your trigger point if you get out of this short, if you want to use a trigger point, or you use a longer term one like this. I guess you have to go to the highest time frame you have available. Ah, right there. It would have been right here. First there, and then right there. Anyway, it's not important. That's not what we're talking about today. It's not important. Let's get rid of these. Too cluttered. We need that one. Don't need this one. Don't need that anymore. Don't need this. Yeah, I'm sure this one gets moved out. This one's not really even important for this either, but okay, let's just adjust it anyways. That's this one here. Okay, that's not important. Oops, no, what did I just delete? That's not what I want to delete. This one's not important. This one still is, right? That is still important, that one there. Oh, maybe actually it adapts. To right there. And then this pulls back down to right here. And your stop on the move, which is your target. What is this yellow guy? Oh, this is the local trend. Okay, perfect. So this is where we're at. So you can see the fundamental difference between these two moves as to one keeps recreating its trend, the other loses its hold level. Because you're going to have a moment of polarity. Whenever you're moving up like this, that's the difference between a move hitting its target and finishing versus creating a range that is constantly developing a base and it's holding its base of its range, right? Like, I guess that would be the most important part of this one right here is, let's delete this and delete this. Identifying that polarity, because that's the base of the move. So this was the polarity right here. This is the polarity in the move right here. This is the polarity in the move right here, right? Like that's the hold level there. This is the one it has to break over top of. This is the hold level here. And let's make these equalized, both gray, right? So this is hit already. It needs to break over top of that. So maybe next would be this for a short 97.21. Maybe in the future we'll come up to this 97.21 and it'll be a really nice short. Yeah, who knows? I'm pretty sure we would. But anyways, we can check that after. Really, the important thing is understanding the polarity on both sides. And when you hard close, that defines whether it's going to go up or down. And the trends help you make that decision of what the possible direction could come. So like in this scenario here, this trend helps you make that decision. Like you would have had this like this. You would have had a trend like this, and you would have had your hold level and say, okay, if we hard close under this, we need to get out of this trade. And that's fine. We accept our profits, our targets hit. We've hard closed this. That's it. The move is done. Rather, you get into this scenario where you're just recreating a new trend. So now you're saying, oh, this until we have another trend to use. So, okay, well, what are we supposed to do here? Okay, well, we know we just don't get out of this trade until this hard close is breached, right? Or alternatively on this side, this one would have been here. So fine, you can now have this trend like this, right? And you're in the same scenario. You're just waiting to see which side is hard closing. You're really sitting here and minute by minute, you're just kind of waiting. So fine. Yeah, okay. Okay, there's the break of the trend. So you should probably move up pretty soon here. And there it is right there. So you actually can just make a new trend. Microcycle the trend, right? Okay, now we have this here. We don't really have anything else yet. So really we're just trying to, at this point, kind of hold this level, but not hard close the base. I mean, that would be kind of the information we use here. Okay, so we hold that level. It's fine. It's fine if it doesn't, if it hard closes, like not a huge deal. And then we'd have something like this to this. Maybe we don't even really have a cycle yet. But anyways, this is just another point that could stabilize the move, right? Hasn't hard closed yet. Great, we're going to create our next move up here. That's perfect. So now we have our trend that's going to break against this hold level. So now we have like the polarity on both sides in this move, and we're still in this trade because we haven't been given a reason to exit the trade yet. Like the difference between 93 and yeah, it's actually a big difference in price, $30. But again, it's fine. Where are you getting out of this trade, right? If your target was hit, if that's all you expect of that trade, take the trade target. Like I think that memory serves me, it was somewhere around here was our target, 96.75, something like that. And this trade is still, it's still just at the base of its range. It's not hard closing anything yet. And even right now, it's got this right here that it needs to get over top of, which is another moment. It's just another moment it has to hard close to gap up, right? It's important in the trade, and then you'd be on a higher time frame here, so we can actually even go to like a higher time frame candle and say, well, we don't want this one. That's not really that important. It's fine. We can maybe use it, but maybe is there a 15-minute here or no? Oh, trading view, come on now. And there actually is a 15 minutes in this moment. So you'd have, okay, it's the same candle, and you have this here. So you have your next trend that you could break and possibly try to unpolarize this move, right? Your next short should exist somewhere, and then so you're here, and again, now, like, what do you have for trend? You don't have a trend. There are no trends left, right? So this is gone. Obviously, you're just simply looking to hard close this guy here, right? Like you don't have anything left. There is no trend, so you don't even need to break a trend anymore. You just need to kind of hard close over top of this level, and I guess you could go like this. Well, not I guess, this is what you do. You could go like this and say, okay, well, this can fuel the next piece of the move, right? Like maybe this is a 3 minute. Yeah, that's a 3 minute. So from there to there. So that I would just attach to the 1 minute candle like this, and so you can break this to fuel the next piece of this move. And that's exactly what happens, right? So, you've unpolarized the move, you've hard closed the move right to your next trend. So what is this, like a 1 minute move, 50%? Yeah, and you just gap straight up to your next target. And then the same cycle recreates up here, right? Like, so you're in this move and you're saying, okay, where's the base of my move? You don't really have anything yet. Okay, you kind of have a base now. Okay, perfect. At least we have this here. So at least there's this here. So now we just simply need to see, okay, we have a trend, which is this blue candle here. We have the base of a move. Like, we have something to at least base this off of. Okay, now we actually have a bit of a better trend. Maybe is this like a 3 minute? Yeah, okay, fine. So you have like this right here on the 3. So rearrange this to the 1, and that's the same thing. Okay, we have the base of a move here. We haven't hard closed anything yet. So we actually have a trend that we need to break now. So we have a trend, right? We have our trend that we need to break. So we actually do have a trend now. So if we can continue to hold this move, we can move up, and we actually create our first hold here, which is nice, because so we actually created like the first hold. So this, you can't lose this. Once you lose this, the move is gone, right? You either break trend and start to create polarity up top, or you lose this and hard close it and the move is done. So even here, you'd be like this in this piece of the moment here, and to right here. So like, at least you have something. At least you have a hold level that can break up top with a trend, right? So you have something. But then you hard close your move, and this is over. Like, you're done. This is it. You needed to hold this level through this trend, at least in order to make some kind of either new trends to start attacking the cycle upwards. Like, you can see the fundamental difference as to where this creates higher moves that create more new trends, and this is just continuously holding its trend. Not only does it hold its trend, it creates polarity and hard closes polarity. So that, like, this move is done. That's the difference between these two. This never hard closes polarity, and it's constantly creating new levels, right? And then this thing just falls off a cliff, right? Yeah, this thing just falls off a cliff because there was polarity was already created, and it lost the move. It's the difference between a target being hit and never breaking over that hold level versus a target being hit and creating new hold levels and new hold levels and new cycles in the move, and just constantly holding the base of the move. Like, I'm sure if this hard closed, it'd be a different story, but it didn't. So this is the way we look at trades when we're in target. So when we actually go back to our original spot where we entered this trade, which was, we entered it back here. Let's move this here. We entered this trade right here. When we originally entered this trade, we were able to kind of constantly make a decision of our target is hit, right? Or we stop out somewhere in this trade. And once we get to a certain point, like here's where we would have stopped out, and there was no reason to stop out. So now it's a matter of, like, even here, you can have your trend like this to this. So you could have stopped out there if you want. Again, not what you're looking for in the trade. You're looking for your target to be hit, right? So if you start moving up, you can have a trend like this. And if this trend breaks, you can get out of the trade. I don't really think it's advisable, but yeah, okay, fine, right there. And it gets to this trend right here. Like, it's just trend polarity too, right? Like, in the moment, the trends are just polarizing against each other. Again, we're not setting stops against trend though, because you can't really do that. You're basically saying, oh, where is the hold level in the move, which is, right here, and that's your target for your next trade anyway. So you either hit your target, and a target is always hit, right? Like that's kind of key. Like, a target is always hit. And if you for some reason miss your target, you can use your trend. Like, let's even go to the hourly here, and the hourly was developed right here. So if you for some reason, let's pretend this isn't here, and let's say this isn't here, and this isn't here, and this isn't here, and this isn't here, And you're saying, oh, we need to break this trend. Fine, we don't even care about that trend really. That's not there, and this isn't here, and this isn't here in that moment. And you thought you like when I first started this video, I simply just didn't mark this one because I just didn't see the range. Like maybe I missed that, and I thought this was the actual target up here, 98.15. And I'm sure that is a target in the future, right? That's fine. I'm sure it is a target. But if I was in this trade, right, even I would go with the highest time frames, and I would start to at least create something that would show me, okay, if I hard close this, right, I'm actually out of the move. So I would want to hard close this on the hourly. So I would go and I would justify this on a different time frame, right? Like I would say, okay, here's 15 to the 15 right here. If I hard close this, I'm out. Right? So then you've got your trend right there. And I would actually move this to here, right? And so that's that, that's this. And if you hard close this trend, you'd be out of the trade. You'd probably fall through it pretty quick. And like, I'm pretty sure that's actually why this happens, right? And you fall through it so fast. So what would you have actually made if you missed your target? So we got in at 58, I believe it was, and we would have stopped out here. 0.85, really not great, right? Like it's always better to hit a target. I suppose what you could do is you could use a trigger here. Like you could go to this point here, and you could go to, come on, this right here. And when you hard close that, you could also be out. Like you can continuously raise your stop loss and you can continuously raise your trigger points to get you out of that trade for more profits. But really, like obviously your target is best because a target is hit or a trigger is released. So typically when a trigger in a trade is released, you've missed something. Even you could go to a higher time frame here and say, okay, well, here's the base of the hourly. And that's the next candle, so we can't use that. What about the 30-minute? Yeah, can't use that. 15. Yeah, you could use this right here like this. You could use the hourly to the 15 like that. And when you lose that, you could get out of the trade. So you could be out right here. But I mean, again, trends are meant to fuel moves. So what's going to happen when you miss your target and your trend breaks? Well, guess what, right? Your information was here, the base of the move being right here, and losing that move, right? Like losing that whole level. That's your polarity. That is what should be where you release your trade. Like trend is fine to release trade on trend. If you don't know what's going on, we use trend as something that can, it's a great trigger point. But like I always say, either your target is hit or your trigger is released. So your trigger being your trend. So either one of two things happen. And in our case here, we just simply didn't mark out the range. Where are we? Yeah, we just simply didn't mark out this range from the start of the video, which is our own fault. So that's like a common occurrence. So you miss something and yeah, sure, one of your triggers is going to get hit. I think at that point, if my trigger got hit, I'd probably just stay in this trade, to be honest. I actually missed this big move here. And I was down here looking at this hold level saying, where should I stop out? I would probably just leave it here and let it break the trend up. At least I got a second exit there. And at that point, it's not, if I had missed this trade because I missed my targets here, like if I was in this trade, I would probably leave my stop right here on the final level. Just let it keep going, because how do you stop out where you're supposed to rebuy? Like if this is your rebuy area here, whatever this is holding, if that's your rebuy, how do you stop out there? Like that's pretty tough to do. But anyways, this is more about understanding the top of a move and how you see a range continuing versus a target being hit that's actually pulling back. So when a target is hit, you can see it. It has a moment of polarity on either side, and it hard closes that moment of polarity, and you should be out of the trade, straight and simple. If you constantly break trends and hold the base of your range, and the base of your range is your polarity moment, if you constantly hold the base of your range, just like in that first segment that we looked at, you hold the base of the range, you continue to break trends, and you start to unpolarize up top, guess what? You're just gapping to the next range. If you hit your target, pull back, create polarity, follow your trend, guess what? Your target was hit, you're moving down.